Time for our hot pick section of the program, and today we were focusing on small cap stocks. And to do that, we're joined by Sajan Bedi, Vice President and Portfolio Manager at Canoe Financial. Great to have you back with us. Let's start with just the broader. First of all, it feels like the sentiment for small caps has been pretty good if we compare it to the broader TSX. Is that fair to say?
I would say it's been a little bit more mixed. I think there's still kind of this affinity to the larger cap areas of the market that have continued to perform well, even as multiples have expanded in that area. But we think we're getting to the point where, you know, the multiples on some of these large cap indices are stretched to the point where there's going to be more opportunities in the rest of the market where valuations aren't as expensive. And we think that creates an opportunity for stock picking in that small mid cap area that obviously we're more focused on within our portfolios.
Okay, well, let's go through a few examples today, starting with Definity Financial, which is a standout stock performer. Maybe remind our audience what it is the company does and why this one has your attention.
Yeah, for sure. So this is a company that IPO'd back in 2021, and you know it's been a core holding of our portfolios ever since then. So the company, just to level set, is obviously one of the largest property and casualty insurers in Canada. You can almost think of them as a mini Intact Financial, where they provide both personal auto, personal property, and commercial insurance, both to businesses and individuals across the country. And you know what's obviously really attractive about the business is that it's recession resistant. Obviously, you need insurance, whether it's good times or bad. But at the same time, the company has really strong growth characteristics as they've taken market share and obviously benefit from the strong pricing environment we're seeing in the industry right now. So I think that's a really good core opportunity. But what's really attractive at the moment is the company just closed on their largest transaction ever. They bought a company called Travelers Canada very recently, earlier this year. And we think there's lots of opportunities for the management team there to improve the operations of Travelers, expand the margins, and improve the ROE of the business, which we think is not fully reflected in the valuation here in the stock.
Okay, another company you wanted to flag, Searia, SIS, is the symbol on that one. How come?
Yeah, I would say this, we would characterize the Searia as kind of this really high quality business with a long growth runway that's being pressured for short-term concerns that really don't impact the longer-term fundamentals of the business. So Searia, they provide accessibility equipment to seniors. So some of their core products would be, you know, wheelchair lifts, stair lifts, and elevators that elderly people would use in their house so that they can, you know, climb up and down the stairs and so that they can be mobile within their own houses. And why we like the business is we think it benefits from a few really key secular themes. The one being obviously an aging population, and the second being you know, this propensity for seniors, especially after COVID, to want to age at home more often. And to do that, you need some of the products that Searia offers. What we also really like about the business is the management team there has done a great job of improving the business over time. They've expanded the margins, they've reduced the leverage, they've improved the free cash flow conversion. And we just think with the stock trading at the low end of its historical valuation range, that creates an attractive setup for the stock as we look out here.
And then finally, A&W Food Services of Canada, also on your list today. What's the story there?
Yeah, I think this is a name that obviously it's a well-recognized brand. Everyone knows A&W as the second largest burger chain in Canada. But we think this is a really attractive kind of under the radar opportunity in Canada that we're seeing today. So when we first initiated a position in the stock and we started looking at it, the company had just closed this milestone transaction where they internalized the A&W Royalty Trust that was previously outsourced. And what that created was this, you know, pure play QSR franchise business that's really similar to other franchise models like what Tim Hortons has with restaurant brands. And what we really like about the business is that, you know, this asset light, you know, royalty model is obviously extremely high margin, and the company can continue to grow without putting a lot of the CapEx for that growth up on their own. And when we combine that with the company's very clean balance sheet, the strong free cash flow profile, this is a business when we look out over the next few years, we think can continue to compound very strongly. And when we combine that with almost a 5% dividend yield the stock offers, I think it's a really compelling total return vehicle for our investors.